Welcome to Chit Chat Money. On this show, hosts Ryan Henderson and Brett Schaefer interview industry experts and riff on the world of investing. As a quick reminder, Chit Chat Money is a CCM Media Group podcast. Ryan and Brett are not financial advisors. Anything discussed on Chit Chat Money by Ryan or Brett or any other podcast guest is not formal advice or a recommendation. Now please enjoy this episode.
Okay, welcome in. This is the Thursday Deep Dive. My name is Brett Schaefer. I'm here with Ryan Henderson and Ian Gray. Ian, how are we doing today down in Arizona?
Doing well. Yep, doing well.
Yeah, both our NFL teams are out of the playoffs, so not much sports to watch over the next few months.
It's a tragedy.
It's going to be all investing all the time, right? But first, before we get started, we're talking about Bumble today, pre-IPO company, but one that I think a lot of people are interested.
You wanted to talk IAC.
I did, yeah.
I made a last-second audible, and you weren't happy.
You made a strategic decision, but we can talk IAC another time. But first, we got to talk about our friends at Seven Investing. What analyst do we want to talk about today? We want to talk about someone like Matt, He's the one we know the best. Sure.
Yeah, I mean, we called him, I think, PBF, podcast best friend.
Yeah.
He's been on the podcast the most times. But yeah, he's like a fintech expert. Mm-hmm. He really knows that industry well. I always look forward to I look forward to all their analyses, but I really look forward to his because that's sort of an industry that I usually like to follow. It's exciting.
Definitely fintech expert and more of a standard. He leans kind of more towards the standard value. It's hard to describe someone on that spectrum, but kind of more towards the value on that spectrum. And if you want to be a member of Seven Investing, you can get $10 off with our code CCM at checkout, $7 for your first month. All right, Ryan, you want to talk about Bumble?
Sure. So currently, and Bumble just filed their S1, so they are not public. What are we doing? Like guesses for valuation?
Yeah. So I have the two questions on valuation are, what will the valuation be that you would be interested in, and what valuation do you think it will go out at? So two separate questions should be fun to talk about. Okay.
But currently Bumble operates two separate dating apps, actually. So it's Bumble and Badoo. I think I'm saying that right. Maybe it's Badoo. But Bumble itself is a woman-centric dating app. So women have to make the first move. And there's actually 30% more women than men on the app. I don't know if they just put that on the S1 so that more men would join. But
maybe. That's a good free customer acquisition.
And Badoo, on the other hand, is more popular in Europe and Latin America, and it's actually been around for a long time. They were really one of the pioneers in online dating, but they're sort of more mature now. Bumble's growing much faster than Badoo, and combined, the two have more than 40 million monthly users, and they monetize those users through a freemium model. So the app is free to use, but there are certain in-app features that cost money, and they say it can provide a higher chance of connecting with someone. There's subscriptions, which can give you easier access or more choices, that kind of thing. But then there's also these a la carte features. So if you matched with someone and then you unmatched, you can pay $1.99 to go rematch. That's kind of the in-app one-time features that I'm talking about. But the history about the company is actually really interesting, kind of an intriguing story. It was originally founded by Whitney Wolfe Herd in 2014 after she left Tinder. She was the former VP of marketing at Tinder and an early employee, but her departure was pretty messy. And after leaving the company, Whitney filed a complaint with California courts, citing she was sexually harassed and discriminated against at work. Honestly, from the outside looking in, it seems like Bumble was built as a counter to Tinder.
Spite. Gotta love spite.
It sounds like it was born out of spite. And she even took some shots at Tinder in the S1. I have a quote here. It says, Bumble was founded because we noticed two different yet related issues in our society, antiquated gender norms and a lack of kindness and accountability on the internet. We observed that women were often treated unequally in society, especially in romantic relationships. At the same time, social networks created possibilities for connections, but they were focused on connections with people you already know and lacked guardrails to encourage better behavior online. Sounds a bit like a shot at Tinder, maybe dating apps in general. But Bumble was a success and it grew really fast. It seems like she was really good at marketing, and it also just happened to have really good product market fit. I'm sure she was probably thinking about this while she was at Tinder. And in January of 2020, there was a merger between Buzz Holdings and Worldwide Vision Limited, which it looks like are just the parent companies for Bumble and Badoo. And the two are now incorporated under the Bumble brand, but it made the financials pretty messy. And it looks like there were a lot of expenses related to that merger that contributed to their switch from profitable to unprofitable over the last 9 months. Because if you're looking at that, you see the full year stuff for 2019, you're like, oh, that was a hell of a year. And then you look at the last 9 months, very unprofitable. And another red flag that I thought was a red flag was it said on October 26th, they changed their auditor.
Yeah.
But turns out they used Ernst & Young UK. That was just for the 2018 and 2019 numbers of Badoo. And then they used Ernst & Young US for the combined financials and for Bumble. So it kind of it made sense. It just looked like a red flag on the surface. But yeah, that's pretty much all the history, what they do. Does that all make sense? I mean, it's pretty intuitive, but yeah.
Fascinating tale. And maybe they'll have a documentary one day, see who actually wins and becomes the number one app. But I'll talk about the industry landscape and competition. You can group the company within the online dating sphere. There's web-based things and there's app-based things. They've essentially merged into one industry over time. Online dating as a whole is growing quite rapidly. I think we all know that. All other forms of meeting people for dating, at least according to surveys, are declining. And online dating is the only one that's totally skyrocketing. So it's taking the entire market by storm, at least over a longer period of time. I mean, if you look back over the last decade, you can see just tremendous growth rate. And the market is estimated to be around $3.2 billion in revenue in 2021, with a majority of the revenue going to Match Group. So they're very dominant in this space. Match Group is Bumble's biggest competitor, and Tinder is the Bumble app's biggest competitor. So Bumble as a whole, they're competing with Match Group, but Bumble versus Tinder, the two apps, those are kind of the big competition. I know Hinge gets tossed into there, but it's a little different.
Yeah, I think it's Tinder 1, Bumble 2, and Hinge 3, at least here in the US.
Yeah, and that's a big, it's a wide gap between 2 and 3, at least right now, although Hinge is growing quickly, but that's not what this is about. Market penetration is pretty low overall. So at least for paying users, I think it's below 5%, even the United States, which is the most mature market, and that is expected to grow at about 10%. For the foreseeable future. Although, again, we always take these with a grain of salt. Just because someone projects that it's going to grow doesn't mean it's going to actually grow. And lastly, it should be noted that a lot of people use multiple dating apps. So just because someone has Tinder does not mean that they won't also have Bumble. A lot of people have both. It's just what everyone has the better value proposition at the moment. And it's unlike a Spotify subscription or other subscriptions where it's you only need one and you get everything. There's value people have for going to both.
I think it's a bit like gaming. Like most people don't only play one game at a time. I mean, at the exact time they do, but usually they're filtering between multiple games. You can't play all the games or you can't be on all the apps just because it's a little too time consuming. But yeah, most people, I imagine if you're on the dating scene, you have multiple apps at once.
Definitely. All right, Ian, you want to talk about management and ownership?
Yep. So like Ryan mentioned, Whitney Wolfe Herd is the CEO and founder. She founded the company back in 2014 after the fallout from Tinder. She originally was actually looking to do like a female only social app, which is kind of interesting. And then ended up talking with someone who became an investor and converted it to this idea of a dating app. She's about 31 years old, definitely a younger founder, but she's also very accomplished in the industry. With her success with Bumble and also her career at Tinder for a couple of years. She said that the model is based on the idea of the Sadie Hawkins school dances where the girls ask guys to the dance, and just that's kind of that's been popular in schools, and she thought it would be popular as an app as well. One thing to note about the ownership structure is that in 2019, I believe Blackstone took a majority stake in the company from a previous majority holder who had about a 79% stake in the company after he had allegations of misconduct. And so that's when private equity entered the picture. And like I said, Blackstone took a major piece of the company as part of kind of an effort by them to diversify into higher growth opportunities through private equity. So it has this PE backing at this point, which will make which will be important as we look at the balance sheet as well. But she received about $125 million payout as part of the sale to Blackstone and part of a kind of a recapitalization of the company. So again, I'll get more into that in the balance sheet, but she seems like kind of a great example of a mission first founder and how that can sometimes lead to a company that's really lucrative for shareholders. So just that there's some companies that you think are really mission focused, but don't really generate profits. This is a type of company that I think its mission and trying to be woman led and woman first really leads into creating a little bit of a competitive advantage for the company.
Yeah, she tells a good story, or they tell a good story.
Yeah, it kind of feels like stakeholders over shareholders right now at this point in their life cycle, just because, which isn't necessarily a bad thing. Sometimes when you're really focused on the stakeholders, you can get good returns. But
yeah, and I just add one thing to that. I think this is an interesting situation where sometimes we hear stakeholders over shareholders, and that makes me a little bit skeptical. But in this case, I think putting stakeholders first really generates those, is generating potential returns for long-term shareholders.
Yeah, and it looks like it helps with the quality of the business and their unit economics or whatever, all that stuff. Their margins look pretty good. Very similar to Match Group, so no complaints there. All right, I'll get into the valuation. We're pre-IPO here, and it should go out in the next month unless they, see some sort of not enough demand or too much demand, or they don't want to price and actually go public. So we don't have real valuation numbers, but we'll play the prediction game after this. I just want to do a quick comparison with Match Group. So Bumble has about 2.4 million paying users. Match Group at the end of the same time period had 10.8 million. So that's about 22% of the total users for Bumble. It's not apples to apples because there's, growth that has to be priced in, or the type of apps matter, ARPU, stuff like that. But if the market gave Bumble the same subscriber multiple for paying users as it does to Match, it would have a market cap of around 8.5 billion. And after that, what do you guys think? What valuation would you be interested in Bumble at, if at all? And what valuation do you think they will go out at? Ian, do you want to go first?
Or I can go first. So I think I'd be very interested in the company if it got out at about a $5 billion valuation. That puts it at about 10 times sales. And I think, Bumble's growing quicker than that, but Bumble's growing quicker than the overall business, but I think that's a fairly fair valuation. I think it's probably going to get out somewhere closer to 20 times sales in kind of the $10 billion range, but yeah.
Ryan, what do you got?
I think it will get like a very similar multiple to Match, because this is like one of those businesses that has a very direct comp for people to look at. And so they're just going to price reference off of Match. And the growth rates for the combined entity of Bumble, so Badoo and Bumble or whatever, over the last 9 months, I think has actually been pretty similar to Match Group.
Yeah.
So I would be surprised. I'd be surprised if we got a premium over Match, considering that Match is a little more profitable over the last 9 months. I don't know. I'm probably in the same category as Ian. Below 5 billion is exciting to me. But
yeah, I'd agree with that too. I think it might go out at a higher valuation. No, I think I predicted like 12 billion, just because people see that Bumble's revenue growth at like 70%, which Ryan will probably get into. But that's on its own, right?
It's not 70% anymore. It's like 30%.
Oh, for 2019, sorry, right?
Yeah. I guess if you do the 2019 numbers at 70% over the last 9 months versus the 9 months prior, it's like 30-something%, I think.
Okay. Yeah. That's growing faster than Match. So they might put that as a premium just because they think that Bumble could, it's going to be the majority of the revenue soon. But I don't know. I'm also kind of just thinking with this market, with this IPO market, I would not be surprised if it went out at 12 billion.
Yeah, I don't know. I'm not going to be able to predict the valuation on day one. But should I get into the earnings?
Yeah.
Okay. I'm going to give the last 9-month numbers, but remember the merger was completed on January 29th of 2020. So that first month, the month of January, was not the combined entity, but I'm taking the combined numbers, if that makes sense. So they had 416.6 million in revenue for those 9 months, up 15% year over year. 61% of the revenue is from Bumble, 39% is from Badoo and other revenue. Bumble specifically was growing revenue at about 25% year over year over the last 9 months. So significant slowdown from that 70% number. The combined company had a net loss of 116.7 million for the period. That's GAAP, obviously, and then versus 69 million in net income from the prior year or the prior period. Big difference between their net GAAP numbers and adjusted EBITDA because of those one-time merger-related expenses. They had about 26% adjusted EBITDA margins. Take that with what you will, but that's sort of their adjusted EBITDA numbers for the last 9 months. I know that seems like a huge difference between that and GAAP, but pretty much cash flow break even for the period. In 2019, though, if you're looking for a normalized year, they had about 20% free cash flow margin. So it's a high margin business, naturally, but there were those one-time expenses that really hurt them this year. And as of the last reporting date, the combined company had 42 million total MAUs and 2.4 million paying users, most actually coming from Badoo, but Bumble's average revenue per paying user is like twice what Badoo's is. So that's why they make up so much in revenue. I would say it's worth noting, don't compare apples to apples paying users when you're looking at Match Group and Bumble, because Bumble includes anyone that purchased a subscription or an a la carte feature. And a lot of people just purchase like a la carte features, one-time things without actually buying the subscription. Match Groups are average paying or average subscribers. So it's only subscribers for that period.
Yes.
Not a la carte features.
Yeah, and they do their ARPU differently. So you're going to see their ARPU for Match Group be below $1. And that is because they put it over their entire user base and they have like over 500 million or whatever it is. You know what I mean? So theirs is less than $1 and Bumble's is over like 25 or something like that. That's just because they're using it too differently. I'd assume that Match Group with their paying users would be quite similar, right?
Yeah.
Does that make sense?
I mean, I'm not on Bumble, but I assume the subscriptions are similar cost.
Yeah, very similar price. All right. Ian, you want to hit balance sheet?
Yep. So with these pre-IPO companies that we've done a few of them now, but you always are going to want to check these balance sheets again once they make their first report post being public, because there's a lot of like restructuring involved and things that go on when a company goes public. But as of now, they have about $100 million in cash, a little more than that. Once they get the proceeds from the IPO, that's likely going to be between 200 million and 250 million. They have a significant amount of debt on the balance sheet, about $825 million of debt. And that's partially due to a payout to the owners, including Blackstone and then also the CEO. She received about $125 million payout related to kind of the merger. So it looks like, this is a little bit of speculation from me, but it looks like they did basically a dividend recapitalization. And so they took on some debt to pay out some money to the shareholders, which oftentimes happens with these types of PE deals. And so, again, you're going to want to take a look at this balance sheet once they go public to see exactly how it all shakes out. One other note I'll make is they have a significant chunk of intangible assets on their balance sheet, including they're valuing their brand at about $1.4 billion, which seems a little bit, it just seems a little bit high. I don't love to see stuff like that on a balance sheet because it seems like, do you really need to put that on a balance sheet? I assume they put it there because of this debt they raised so that they could do the payout and that it made the balance sheet look better. They said, hey, we can get a fair value on our brand and then we can loan money out against that. But anyways, not a huge red flag, but just something that, like I said, I assume it's due to some of this debt financing that they were doing, but not something I'd love to see.
Yeah, that does seem a bit aggressive for 1.4 billion, especially when if you compare it to Match has a lot less.
That's like more than Bumble's all-time revenue.
Yeah, it's definitely aggressive, and yeah, the balance sheet is probably not as healthy as that would make it out to seem, right? Wouldn't you guys agree?
Yeah,
for sure.
All right, we're going to hit an ad break, and then we're going to get right back into the second half of the show. Okay, welcome back. First up will be competitive advantages. Ian, what do you got?
Yep. So one is kind of an obvious one, but they have scale. They have some network effects. With apps like this that are these networks and these dating type apps, you have to have enough people on it that people actually can match with the right people and that it's a good experience and all that type of stuff. So it creates a little bit of a barrier to entry for, or at least it makes it hard for new apps to really enter the market and gain a lot of market share. And they've already reached that point where they have network effects. So it's a competitive advantage against incoming players, not necessarily against the incumbents.
Yeah, they don't have that advantage versus someone like Tinder, but it's really hard to replicate Bumble unless you put a lot of investment into it.
Yeah, and to Ian's point, the marketing strategy is focused around college campuses, and people are like, well, so is Tinder. That was Whitney Wolfe Herd who deployed that marketing strategy at Tinder. I think that and
or she
the other early employees.
Yeah, she started it or whatever. Yeah.
Yeah, I mean, she's had a lot of success with that. And I think that's definitely the way to. I mean, that's the target market almost. So, yeah, that's definitely the way to grow, I'd say.
Yeah. All right,
you want me to go?
Yeah, you got yours first.
All right, the female first brand. They've really built the first one. It's really just female centric all the way around. There's 30% more female users than male. Women message first. Female co-founder. 73% of the board members are female. I think this is hopefully if you're using the app, you feel less exploited on an app like this if you're a girl or a female than on something like Tinder. But at the same time, I'm not sure users really care what the board of directors looks like. I would say it's hard to replicate that. I don't think people could just come in and say, well, we'll be woman first also. I think Bumble is the first one to it, and they can kind of keep it.
Yeah, I'd agree. All right, I'll hit my competitive advantage. I think they might have a focus one. We talk about that a lot when people are competing with big tech. But you look at someone like Match. They have a diversified set of apps. They don't need them all to succeed, but they're not focusing all their resources on one. Bumble, they have that focus on one app. That I bet the majority of their resources are going into Bumble itself. They have the narrative around them being female friendly. And then they have the founder CEO to tell the story, which can be helpful because Match Group, is a part of IAC. It's kind of, I think their management team is good over there, but it doesn't have that same, I don't know. People fall in love with the founder CEO story. And I think that can be helpful, sometimes.
Yeah. I mean, there's something to be said for focus, I guess.
But again, they have to get Bumble right then.
Yeah. Future growth opportunities. Ian, you want to go first?
Yeah, I can hit it first. So I think they have some potentially unique monetization opportunities, particularly, and I know they've dabbled in these, but like in-person events or experiences, even stays and trips like at hotels or vacation experiences. Because as I was thinking about it, who has more data on dates and relationships than Bumble and Match Group? Right? They just have a ton of data there. And so I think there could be a lot of unique ways to leverage that data other than just their primary matching function on these for these dates and relationships. Kind of a comp I was thinking about, and I know it's always hard to compare things to Amazon, but Amazon has expanded into many different markets because it has a lot of consumer data. I think the same potential may apply to something like Bumble or Match Group as well, that they have all this information on relationship data and that they could use that either to sell it to other third parties, partner with booking.com and say, hey, if we get someone to take one of your hotels, we get a little referral fee, whatever it is, right? I think there's some unique opportunities because of how much data they have.
Yeah, that's a good idea. I never thought of that before.
Discounted one night stands.
Yeah, well, it seems in general that a lot of these dating apps, they've gotten the matching part right, they've gotten the communication part right, but the innovation seems very low to me. It seems like there's a lot of experiments they could be doing, right? I mean, not something with restaurants. You could do a partnership with restaurant or locations or movie theaters, right? Don't you think?
A booking.
You could create bundles for sure, right? Hey, you match with this person. Maybe you even pay up your service on Bumble to get these bundling services where then you're able to get, dinner for a reduced rate, a movie for a reduced rate, dessert, whatever it is. But I don't know. Yeah,
that is. I think the idea of a bookings discount is a really good idea, and we saw a Match Group buy OpenTable and try to go that way. So you could schedule a date, and then maybe eventually if they combine those apps somehow.
Is that integrated into Tinder yet? Because if it doesn't integrate, I don't know.
But without, I would just say that a bookings discount seems like it would be much better than a table reservation for Tinder.
Yeah, or Airbnb too.
Right. Yeah,
that could be cool.
That's interesting.
Right. Ryan, what do you got for future growth?
Mine's growth through acquisitions, which I know that's not as exciting as maybe a bookings discount, but it should be high on the list. And that's, for me, what makes Match Group so appealing is they have this diversified set of businesses. And I mean, online dating lives and dies by network effects and virality. I mean, we saw it with Match.com. However popular that was at the beginning, it's not as popular now. Or maybe it hit stall speed, I guess. Maybe it still has the same users, but it's not.
Yeah, it's stalled out.
Which is just as useless as an investor as something dying, I guess. So, I just going in, buying businesses when they're young, buying other dating apps, buying, there's nothing wrong with implementing the same Match Group strategy.
Yeah, and I think a lot of these dating apps could go more niche, especially if they can use the Tinder or Bumble to their advantage to try to leverage users. Like, all right, if you're into blank, blank, and blank, or maybe just one thing, there's certain groups of people that like to date each other. That's a big requirement for that. If they could go more niche with that, I think that could, I could help a lot.
Some people, it's good. You probably don't have as much scale that way, but there might be more monetizable, like the Trump fan dating site, Make America Date Again, or whatever that was.
I mean, say what you want about that, but
that's very monetizable.
Definitely could work.
What's your future growth up?
Yeah, so this is, it's a very simple one, but the international markets. So Bumble has not really invested heavily into the international markets yet. Tinder has done very well internationally. They've expanded. I think I was reading one time some transcript that it took them a long time. It took them a few years because each market is different. The culture is really important for dating. So, whether it's even India or Bangladesh or some other place in Southeast Asia, you might think that group at, the dating culture is similar, but they are actually quite different. So Bumble does have a lot of green space to go after. They said they really haven't started investing internationally yet. And that might be just something they have in their SEC filings to get people, thinking about, there's a lot of growth ahead of ourselves. But I do think they have a lot of green space to go after. However, Tinder is very established there. They know the cultures locally are at least, better than Bumble, and they may have some headwinds and have to spend a little bit more if Tinder has kind of, a lot more users.
But Badoo probably knows it as well as Tinder,
That's true.
European and Latin American markets. So, maybe leveraging that knowledge, because you're right. I think dating across different areas of the world is very different. Yeah. But highlights and lowlights, Ian, you going first?
Sure. So I think the highlights for me is just, I'm impressed with how the app has grown, and especially to take on the incumbent, particularly after kind of her fallout from Tinder, to kind of be able to take what was a pretty negative thing and I think pretty devastating in her mind to her career and turn that into Tinder's top competitor is pretty impressive. That's a crazy story. And some people have talked about, and I think we mentioned it too, is, could be a great movie, could be a great story someday. But I was also impressed, I guess, by the average revenue per paying user of about $25 on Bumble specifically. And so that just seems like if you're going to once you get people paying, if they're paying you $25 a year, that's pretty good for an app like this, I think. They seem to be monetizing fairly well. The lowlights for me are the private equity backing just makes it a little more complicated with the debt and just understanding exactly how the ownership structure is going to be post IPO. But we'll get some more clarity on that in the next few months probably. And then also just the large incumbent. It's hard to battle against someone like Match Group, I think, with all the brands they have and all the data and the capital. But interesting business.
Yeah, the ARP numbers seem strong, especially when you think, what do they have? 2.4 million paying versus 40 million total monthly active users. If they can slowly convert more people to paying, I mean, I don't know. They have a lot of room to run. I hate using the term room to run with paying users or something like that. But I mean, if they can get people to pay $25, that's pretty good.
Is it $25 a year in ARPU, or is it?
Ooh, I don't know.
Per quarter?
It might be quarter.
Yeah, I think it might be per quarter.
But either way, it's still good.
Yeah, I'm just thinking of like the subscription price on dating apps. It's higher than like 25 for the year.
Yeah.
But
all right, Ryan, you go ahead.
Yeah, my highlights, they've got great product market fit, and online dating is, people use this all the time, this term, but it's the rising tide lifting all boats. It's not a winner take all market, in my opinion. I think there's going to be a lot of successful apps, a lot of niche ones, and Bumble could succeed and Tinder can succeed because users are using both. So yeah, I like that. And another stat that I found, and everyone's seen this chart, but it's roughly 40% of couples met online in 2017 versus about 20% in 2010.
Yeah,
so
pretty good.
It's growing fast.
What do you guys think about, sorry, I'll before you get to your lowlights, what do you guys think about getting them into more of matchmaking, where they try to get more specific? You know how there used to be, I don't know how old this practice is, it's probably, a few decades old, of matchmaking. Instead of just having a supply of one side and a supply of another side, they actually try to match people together.
Oh,
like the app does it themselves.
Like using the data?
Yeah. What do you think about that? Do you think they will get into it or should they? Ian, I don't know. What do you think?
I don't know. It's kind of like, in some ways there's some obvious benefits to that for the company, but I think it also gets into some kind of murky scenarios about, I don't know. I think that there may be some questions that they don't really want to have to answer about how are we matching people? Is there any sort of discrimination going on? Things like that. I think it just opens the door for some potentially kind of sticky situations for them.
Yeah, the net benefit might not be as good as any downside there.
True. There's massive tail risk. That is it. It starts to infringe on it starts to make me think of Facebook.
Sorry, continue. Ryan.
But yeah, my lowlights. And some people might disagree with me about this, but TechCrunch wrote a pretty damning article about Whitney and the falling out at Tinder. And so there was a lot of witness accounts of what went on. So the author interviewed a lot of people, and it really seemed like Whitney had sort of an obsession with credit, like receiving credit. She kept referring to herself as co-founder, which this was like 7 years ago, but it just kind of makes me question where the priorities lay of like credit versus returning shareholder value. And also Bumble Biz seems like a waste of capital. It just seems like a waste of money. It's where you find like business partners via Bumble. I don't see how those two overlap at all.
That's Twitter, really.
Yeah.
Or LinkedIn, Twitter and LinkedIn.
I don't know how you go from like, here's female-centric dating to let's add a LinkedIn competitor.
Definitely seems like a waste. And I agree with you on the CEO. I think there's a few red flags with there. One, the thing that Ian mentioned earlier with the cash payout of $125 million under the corporate reorganization. And then
19%. Why do you need that?
Yeah. I don't know if they had to do it because of the PE guys wanted it. That could be true. But there was also a time, I think it was in 2019, when the company sent over $100 million to a Delaware limited partnership that is controlled by Tilson.
What's Tilson? Sorry.
Or is that her name? Sorry.
Whitney Hurd.
Hurd. Sorry, I was thinking, I don't know. There's a Whitney Tilson, I think.
Okay.
The CEO founder is who they sent it over to with that $100 million. I think there's a few red flags there.
Yeah, there were some management concerns for me.
Yeah, definitely. That's my big low light. I don't know.
And I encourage anyone that's considering investing in this to go read that article because it has some witness stories, and some of them were kind of funny.
Well, I mean, it kind of
but it's also people might be biased, so keep that into account.
Well, I kind of think about it as what would you put her on at a 1 to 10 like Ehrlich Bachman scale from Silicon Valley? I feel like she might be, without looking from the outside, like a 6 on that, and higher is not better.
The obsession with credit thing was just a bit concerning for me.
Yeah, I'd agree.
And I guess the entire business model felt like it might have been developed out of spite, which seems like a strange motive.
Yeah, definitely.
But it's powerful, probably. Like, I understand the concerns about some of their, it was a tough situation, I think, at the end of Tinder, and I think there's some faults on both sides potentially. Yeah. But I think the thing that I look at and that's impressive is the fact that she's built a viable competitor in the last, 6 years, basically 7 years since that happened. Like, it's pretty remarkable to take that as I think she was 24 when she left Tinder, and to turn that into this huge competitor. I don't know, like the credit thing, I agree. I think that's somewhat concerning, but the fact, like, I would care more about that if she hadn't done anything. But the fact that she's actually built this whole thing kind of proves to some extent that she does put in the work, and she cared about credit enough that she actually started her own thing, I guess. And so in this case, it may have been a benefit to her, but who knows? It's a interesting situation for sure.
That might be the chip on the shoulder that makes it the number one app, I guess.
Yeah, I mean, the track record is no doubt impressive, and I mean, she's young enough where, I don't know, she's got the experience of someone that might be a lot older, and she can really use that to her advantage. I'll get my highlights. I think the Bumble app at its core is a great idea, and I think we all know that the unit economics are strong. They're almost exactly the same as Match Group, right? In 20 to 25% free cash flow margins, like 35% operating margins. Let me see. I lost my point. I mean, they're riding the online dating wave. The tailwind behind them overall is huge, and it's worth a lot of money. And the founder-led thing, you gotta put some points to that. Although we did all talk about the red flags, and that was all my lowlights. Is really just the management stuff, the pre-IPO payouts, stuff like that.
All right, then are we more or less interested? Ian, you want to go first?
Yeah, I'd say and this is the bad answer, but I'm just about exactly as interested as I was. I think if I was going to invest in a dating application, I think it would be this versus Match Group, is my impression, but I'm not super interested in the space, actually.
All right, that's good. What valuation? I guess you said 5. So you're going to be interested, maybe take a deeper look at like a $5 billion valuation, something close to that.
Yeah, probably. If it was down in that range, I'd say, okay, I should take a closer look at this. It's just not, for me, it's not an industry I necessarily am really excited about being invested in. And so, it would have to be a very attractive valuation.
Okay. Ryan, what do you think?
I'm actually less interested. I wanted to like this business. Like pre-S1, all that stuff, I really wanted to like it. I wanted to be like, all right, this is the Match Group 2.0.
Rumors were great. All the rumor stuff, numbers and all that stuff was good.
Yeah, and there was definitely a sense of virality around like my college town. People use this all the time, but the balance sheet and management red flags are making me less interested. The capital structure seems wonky, and I guess maybe that's just stuff you got to dig through. But I don't know. I guess just less interested than I was hoping to be.
Yeah, I'm the same boat. I mean, it's tough with no valuation right now. Obviously, at a low enough valuation, we'd all be interested. But from what we know, it's going to go out at probably at like $8 to $12 billion or something around there. I'm just less interested. I like Match Group a lot better. Yeah, I think it's just that simple. I like their management better, even though we've talked about the management a lot on here. I don't know.
And there's just what if Bumble goes out of favor? Mm-hmm. There's always that risk, and they really have sort of a key app risk right now. Badoo, I wouldn't buy Badoo on its own.
Yeah, I mean, Badoo's an interesting example of almost every dating app that's been around that has scaled. It does stall out. Tinder hasn't gotten there yet. It's probably getting close, potentially. They're the only ones that have potentially had the Facebook level of breaking through that barrier and having that sustained runway of growth. But you would be going against the base rates if you think that Bumble can continue to grow, I don't know, indefinitely
Yeah. I know we're going long-winded, but I also just thought about this. Maybe some of that new last 9-month numbers has to do with limited people on college campuses. As far as user growth, because they are so viral on college campuses.
Interesting. Yeah. Something to know. 2021 numbers will be important.
Yeah.
All right. Ian, anything else before we go?
Nope. I think that covers it.
All right. Well, that's going to do it for this episode. As always, make sure to use our promo code CCM at checkout to get $10 off your first month at Seven Investing. Remember, we are not financial advisors. Anything we say on the show is not formal advice or recommendation. Thank you all for listening. We'll see you on our next episode.